Hey listeners, I just spoke with Kash Dhanda, the so-called cat herder at Jupiter, and Samyak Jain, co-founder of Fluid. We talked because Jupiter is about to launch Jupiter Lend, its new borrow lend product that was built in collaboration with Fluid. One editor's note is that when we recorded this episode, Jupiter Lend was supposed to be out by now, but the release has been pushed back slightly, so just bear with us there. Fluid is an Ethereum-based protocol that began winning market share in the DEX and borrow lend landscape due to its innovations in capital efficiency. Now it's bringing those innovations to Jupiter, making one of Solana's biggest DeFi teams even more formidable. Also, a little housekeeping before we get into the show. We just surveyed Solana investors to get their thoughts on top Solana tokens. The link to that full report, if you want to read it, can be found in today's show notes. It'll also subscribe you to our daily Lightspeed newsletter. All right, let's get into the show. This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Blockworks Digital Asset Summit, which is crypto's premier institutional event, is back in London October 13th to 15th. It'll have speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers. Think BlackRock, Circle, Coinbase, the UK Parliament, Jito and Marinade, all under one roof. Notable names include Joe Lubin from Consensus, Hadley Stern from Marinade, Rebecca Reddick from Jito Labs, a whole bunch of Blockworks folks, and more to come. There's a VIP dinner October 13th, open to speakers and VIP ticket holders only. That will sell out, so act fast. And it's all going down at Old Billingsgate, London. Use the code LIGHT100 for £100 off at checkout. We'll see you there. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Kash Dhanda of Jupiter and Samyak Jain, the co-founder of Fluid. And by the time you all are hearing this episode, Jupiter Lend will have fully launched. So excited to have these guys on to talk about that new product. Kash, Samyak, thanks for joining me today.
Pleasure to be back, buddy.
So let's just start very simple. I think that the partnership between Jupiter and Fluid was a pretty interesting development. Jupiter adding a lending product and kind of deepening its pretty central place in Solana DeFi with Fluid, which a lot of people who follow the Ethereum world see as a really kind of innovative team building in Ethereum DeFi. So I'm curious to hear how this all came together, what the decision was to kind of work together on this lending market rather than build out lending internally at Jupiter or acquire Fluid or something. We'll start there. How did we get to this point?
Yeah, as you know, we've been trying to build this kind of DeFi super app for a little while. And there was one kind of glaring hole in that, which was yield generation, which I think is one of the primary exports of DeFi as an industry, quite frankly. And so we knew that we needed to build something in that direction, to better serve the users and kind of push forward the super app vision. And consistently at Jupiter, whenever we come to this kind of crossroads of like, hey, we need some new products. Do we want to kind of learn it ourselves and grow expertise, or do we want to just go out and find the best founders across the world and have them help us out on it? And so that was really the impetus here, right? Is that we were like, we could maybe learn lending, but Samyak and the team have been working on it for 7 or 8 years at this point, so it took us a long time to get there. So we knew we wanted to kind of partner on it. And then when it came to partnering, there was really only one choice, partially because of how excellent Fluid is as a protocol, but also because of the personal relationship between Meow and Samyak. You want to explain that one, Samyak, on how well you guys know each other?
Yeah, you've known each other for years, right?
Yeah, I mean, Meow was actually the advisor at InstaDev, from seven years ago when we raised our seed round. He helped us get started in the industry sort of like 7-8 years ago when we were just entering. I was like 18 years old. Soumya was my other co-founder was 20 years old. So he was like a very good mentor or kind of like a dad or something who helped us get into the industry and this new world. So from there, he helped us a lot on many different perspective, and we were like really close friends. There was trust and everything. and like 7 years after we're doing this, but we have a lot of history in between. We've done a lot of things together. Yeah. So yeah, that's just brief history on that. I can dive deep if you want, but yeah.
Can I say that Samyak has a very has a very special place in my own relationship with Meow, because it was Samyak that told me Meow's real name. I knew Meow for many months, and he refused to tell me what his real name was, and it wasn't until we met with Samyak and Some at a cafe, and they were just like, "Hey, redacted," and I was like, "Oh, motherfucker, that's your name? Okay, I see how it is." So yeah, that was a critical barrier for my relationship with Meow to break through. It's entirely due to Samyak.
Do you ever call him by his redacted real name just to piss him off?
I wouldn't dream of it, but I think that's the only thing that I've heard Samyak call him, honestly.
I first saw that maybe Fluid was on Jupiter's radar or whatever because Meow publishes this blog post back in January called On Fluid, where he writes just kind of his thoughts about the DEX and why it's so innovative. So at what point did you start talking? You obviously had this relationship dating back to 2019 or whatever it was. At what point was he like, "Hey, I'm interested in you actually coming and working in an official capacity to build out lending for Jupiter?" And then how long was it to get that
Um,
deal done before you were like, "Okay, now I'm actually building this thing"?
Yeah, yeah. So I mean, it was quite informal in that way, so to say. Like we were always up for helping in different places, different things wherever Meow needed our expertise on, in a bit informal way. On the landing side, I just told him that if there's something on DeFi or something, like we were also thinking if how to expand Fluid to Solana, and it's for sure like we won't be launching Fluid on Solana because it's very Ethereum centric protocol, and growing into two different communities, which is very diverse and sort of kind of have rivalries between each other. It's like it just won't go well. So there was no option to launch Fluid on Solana in any way. And if like there is if there's something that can happen with Jupiter, we'll be up for it. Because I think like Fluid is the most advanced, technically advanced protocol, the most sophisticated protocol. It's like the most from mathematical perspective, from the architecture perspective, and from every angle, it's the most advanced protocol, DeFi protocol out there. And yeah, I mean, we were just excited to like bridge that innovation to more places as possible. So yeah, I mean, it was just quite informal. I just said like, if you guys are interested, then we should explore this. And yeah, I mean, it just sort of gets started. One day, Meow message like, "Do you want to do this or not?" Yeah, I said, "Okay, let's do it." And it just got started. Like there was like not much back and forth or anything. It's just yeah, just okay, yes, both were yes, and so on.
And the Blockworks research reported that it's like a 50-50 revenue share on the lending product. Is that accurate?
That is accurate. And it's a credit to your guy. I don't know if we said that publicly before you guys did. So shout out to the scoop finders over at Blockworks.
Doing my own job for me. And this has implications because Fluid is like doing buybacks of the token, right? I saw that on Twitter.
Yeah, we just yesterday published the forum post collecting feedbacks from community members, Fluid holders, investors, and so on. If everything looks good, then the buyback will start on 1st October. If there are some major concerns, then there can be some changes. But yeah.
Cool. So, kind of with that introduction, I don't want to bury the lead too much. Tell me about Jupiter Lend. What is unique about it from other lending protocols that exist on Solana? What makes this one different, and why are you excited about it?
So I would say there's at least two major reasons. So the first one is that it's simpler for lenders, right? In all other lending protocols, you have to kind of choose which pool you want to deposit assets into, and then your APYs as a lender are kind of constrained by the particular APYs in that pool. But DeFi is a fast evolving place, and kind of rates can change across different markets pretty quickly. And so if you choose wrong, you kind of have to like actively manage the position and move around your funds and kind of chase those APYs. On Jupiter Lend, that's not the case. We have this earn page where if you deposit those assets, USDC, USDT, USDG, SOL, etc., they'll automatically find the highest source of yield across the entire protocol, whether that's a particular, borrow vault, whether it's someplace in Multiply, whether it's someplace else, they will just kind of naturally route there. So you can just rest assured you're always getting the best APYs, which I think is a pretty big one. But the heart of the matter and the kind of engine of any major borrow lend protocol is the borrowers, right? Like that's what creates the demand for the lenders in the first place. And Jupiter Lend is better for borrowers. First, 100x improvement in the liquidation engine, right? And that's all credit to Samyak and his team for putting that one together. And that's not like marketing speak. It is literally 100x better in terms of the liquidation penalties that you'll pay if you're getting liquidated. Samyak can maybe talk more about how that works in a bit. But with that, when you have better liquidations, everything else becomes easier, right? You can get higher LTVs because now we can rest assured that we can liquidate your position as needed. And that allows us to offer the best LTVs of anywhere in the industry, which means like your collateral as a borrower goes further, which really matters. We also have these isolated pools for each borrow lend product, which means isolated risk. Again, unlike the normal pool-based model, where if something happens to any other asset in that pool, it can kind of mess you up as a borrower potentially. That can't happen inside of Jupiter Lend. So it's your collateral goes further while staying safer is the basic idea. There's a bunch of bells and whistles as well that make it better for borrowers, but like my last one, while I'm in full kind of like salesman mode, is universal top up. I think this is like the sickest thing. Basically, each borrow position is its own has its own unique URL, which means you can actually top it up or add collateral from any wallet, or even on behalf of like a friend if you wanted to. And so this is really powerful because most DeFi power users I know actually have positions across a bunch of different wallets. And it's kind of annoying, if you like send it to yourself and if you go back to the site, then you have to like go in and deposit. It just creates like this friction. And especially if you're close to liquidation, that friction can be the difference between getting liquidated and not getting liquidated, right? So if you have different wallets on your phone versus your laptop, for example, you can kind of top it up from anywhere. There's other bells and whistles as well, but if I had to kind of summarize it, it's easier for lenders and it's better for borrowers. That's really what makes it different.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Cool. And then, Samyak, maybe go a little more technical here. My understanding of Fluid is that it has these concepts of like smart collateral and smart debt, which really just integrate all capital in the Fluid ecosystem. But my understanding goes about that deep. So just explain what, and I think a lot of our audience on Lightspeed is pretty Solana focused. They might not have looked into Fluid too deeply. So just give an overview of how that's uniquely enabled by Fluid's tech.
On the same lines, yeah, Fluid is like there is quite a lot of things going on, and there are only very few people who knows very nicely like how all the things work together and complement each other. But yeah, I'll try to go dive deep into it. So yeah, I mean, the overall Fluid's architecture it was the protocol that was created for like it's an ever evolving DeFi protocol. This is the line we posted on the description of Fluid on X on day one, and it's still right by that line, that an ever evolving DeFi protocol. And so the whole overall architecture of Fluid is there is a liquidity layer at the bottom of the protocol. And on top of that liquidity layer, you can build infinite protocols. And these infinite protocols can serve all kinds of needs. Like it can be lending, it can be borrowing, it can be DEX, which is like smart debt, smart collateral that we have. It can be any kinds of DEX. It can be perp, it can be options, it can be any financial instruments that you think can be enabled by on top of this liquidity layer. The benefit of this that happens is like all the liquidity from all the protocols aggregates into the same liquidity layer. So each protocol contributes to the growth of other protocol. So our so Fluid became the second biggest DEX with volumes and fees on Ethereum within 3 months of launch of Fluid DEX. The reason behind that was fluid money market. They both work together. So a fluid DEX got 10x better because of fluid money market, and fluid money market got 2x better because of DEX, because of how they can share liquidity with each other. And how so fluid currently now has the deepest pools on correlated pairs on Ethereum. There is no other pool which are more deeper than fluid because of the cost of capital and everything. So yeah, I mean, we did advancement on every small part of Fluid. This is like the architectural advancement where you can build infinite protocol. Then there are a lot of mathematical advancement. One thing that Cash already mentioned is the liquidation engine, which is 100x better. The reason for that is like how we just restructured how a liquidation totally works. I can dive more deep into it if you want, to get more technical there. Then there is Smart Collateral, Smart Debt. This is some new financial instrument which we created. So something like this never existed before. We just built it and we gave it the name as Smart Debt, Smart Collateral. Smart Debt here is the most innovative thing where your debt is a productive asset or whatever. Like, debt is considered a liability, but now with Smart Debt, you can actually also earn with your debt. So let's say you're paying 5% borrow rate and you're getting 2% trading APR, then your effective borrow rate becomes 3%. If the trading APR is 6%, then you're getting 1% to borrow. So, people can trade on your debt, regular trades, the USDC, USDT. You're trading, it can be traded on your debt. Your debt can switch between assets. Again, I can go more detailed or deep into it. But yeah, overall, the thing is this smart debt is like it also makes your debt productive, which never existed in the entire industry. So yeah, I mean, it enabled a lot of new things, a lot of new user base, which never even existed before. But with Fluid, they just got a better capital efficiency. So every dollar on Fluid deposited works extra mile than any other protocol because there it serves only one purpose, but on Fluid, it serves multiple purpose. Yeah. On with the Jupland, our initial launch will be lend and borrow, but we will expand it to whatever things Jupiter team want it to be.
Interesting. Yeah. So I think the capital efficiency is the key piece there, maybe for listeners to understand.
Mhm.
Another thing I learned in this fantastic Blockworks research report written by Daniel Shapiro, shout out to him, on Fluid, is that a lot of Fluid's kind of edge as things currently stand is in correlated pairs. So like stablecoin swaps on Ethereum. It does a lot of market share there. In Solana land, we have these things now called prop AMMs, where these sort of new trading shops are cropping up where they're able to get really good spreads on things like Sol stablecoin pairs and stuff like that using sort of proprietary tech. And my understanding is that doesn't really exist on Ethereum in the same way. So I'm just curious, is like, how do you think about the prop AMM world, and does that does that affect a little bit how Jupiter or how Fluid is going to operate when it launches on Solana?
I haven't dived deeper into the prop AMMs or like how they work or what they do, but what I can tell you about Fluid is, as I said, like it can be built into any DeFi protocol that existed, can be built on top of liquidity layer and can benefit much more, can be much more efficient. So we're launching our DEX V2 as well soon in next 2-3 months. And with the DEX V2, our target will be to target also become the biggest in the non-correlated pair like ETH/USDC or BTC/USD or any kind of volatile pairs. The DEX V2 will be the way to do that. So yeah, I mean, our Fluid DEX V1, you can say that it was like a first version of DEX that we were showing these new cases of smart debt, smart collateral. But now in the DEX V2, we will superpower the smart collateral, smart debt furthermore by allowing LPs to create different kinds of strategies on top of it. So the basic thing is whatever you can do without it, you can just do it better with the overall system and the liquidity layer in place. So however the prop AIM works, I'm 100% sure that that can be replicated on the Jupiter land and so on and can be made better. Is just, I'll have to look more deeply into like what they're doing, but the one thing is 100% sure that it can just be made better, especially if you add the functionality of smart debt, smart collateral on any AMM. It just gets much more capital efficient. So yeah, I mean, yeah.
Interesting. And maybe to break it down for listeners, correlated pairs, to my understanding, just means stablecoin swaps, right? It's two assets that are correlated
Yeah.
in price.
I think stablecoin swaps is a big one on Solana. The other big one is LSTs, right? So LSTs are a massive thing across Solana. There's a lot of different variations, partially thanks to Sanctum and some others. But yeah, those would be like the two major categories.
And then volatile is anything that is not correlated in price between the two assets you're swapping.
Yeah, exactly. And you'll see this non-correlated pair fluid entering into this non-correlated pair in as short as like 2 or 3 months with our DEX V2. Yeah, so we'll also penetrate the market. Goal is to become the biggest, but let's see.
To drill deeper on those volatile pairs, Samyak,
Yeah.
Correlated pairs are really how Fluid made its name with Fluid V1. Do you expect to see similar success with volatile pairs once that goes live in Fluid V2?
Yeah, exactly. Because so basically, on a generic level, if I were to explain, just a short explanation, there is in the DEX V2, it will allow you to create range orders like how you do on Uniswap, but on the collateral side and on the debt side. So basically, what you can already do with let's say Uniswap or any other DEX out there, you will be able to do that, but with 10 times better capital efficiency. So it will just so with a single dollar you can create $10 worth of liquidity, but you can decide your own ranges and everything. So basically, it will just be a lot more capital efficient in that way.
I think one of the curiosities, and I touched on this at the top of the episode, but when I saw the Jupiter Lend product go live, is the fact that it was powered by Fluid. When historically, the way Jupiter has done things is if you want a new product line, you'll just acquire that company, bring them in house, and then it's sort of branded as Jupiter. Or if not branded as Jupiter, it's under that umbrella. So I'm just curious why either Jupiter didn't build out a lending protocol itself. I mean, I guess there's unique things that you think Fluid offers, which you've talked about. But what was the decision to kind of keep the Fluid branding when you went with this Jupiter Lend product?
Yeah, for us, it was largely a question of like aligned incentives. As a purely financial matter, I don't think we could afford Fluid, and I don't think that Fluid has any interest in kind of like selling out. They're extremely successful on many other chains, so there wasn't really like an acquisition type opportunity there. And sure, there are other lending teams that maybe would have been ripe for acquisition, but again, we just wanted to work with the absolute best. So in that case, it was just like, how do we structure this deal to make it as much of a win-win as possible? As Samyak was saying, hard for them to come to Solana, hard for us to learn exactly how to build, the most innovative kind of architecture. And so the partnership as a JV in this kind of sense makes a lot of sense. I will say it is almost entirely based on trust. Like, I don't think we have much in the way of like paperwork behind this deal. It kind of relies on the 8 to 10 years worth of like history between the two teams to make it work. So yeah, having them on as partners and doing it together, it's clearly, well, I should say, hopefully, it's clearly going to generate some growth for Fluid. It's definitely going to generate some growth for Jupiter as a whole. And us having this like very simple split on the expenses, on the revenues, on everything, makes it really likely that we both kind of stay in it to win it. Especially because lending, I think, is such a dynamic landscape. And with this kind of unified liquidity layer, there's so many new things that you can build on top. It's really not just like hey, build it and then go away kind of situation, right? Like, we wanted to make sure that as Fluid continues to improve its architecture on Ethereum, all those best practices are coming over to the Solana instance. All the new types of protocols that Samyak was mentioning keep getting added. In order to do that, we kind of needed to work hand in hand for the long term.
And then I wanted to ask a bit about just getting into the lending business in general. Something I've thought a bit about and talked to some folks about is like, in the DEX world, liquidity isn't as sticky. Like, you could, copy another DEX, cut the fees, vampire attack them, and a bunch of people will come and use your DEX. With lending, like borrow lend, there's a little more complexity there, and I would think that it takes a little more BD and winning over these large LPs who are pretty sophisticated folks to get people to start using your borrow lend protocol. Or to get like lots of the liquidity that exists. And that's why maybe Aave has proven really resilient, or Camino on Solana is kind of the 1,000-pound gorilla in borrow lend right now. So I guess as you like, what are the novel considerations to building out a lending business when compared to, say, building out like Jupiter's DEX aggregator business?
For us, it's the simple consideration is like, hey, can this generate more value for users, right? If you think about the play that Jupiter's trying to do here, fundamentally, it is like an aggregation model. And I don't just mean like aggregation of dexes. I mean like aggregation theory in the Ben Thompson Web 2 sense, right? Where the more you're able to kind of aggregate all of the demand, the more you can commoditize things on the back end. And I think what Jupiter's been really successful at is getting tons of user attention, building like an extremely loyal and vocal, shout out to the Jupiter community, they're very vocal, community that is quite sticky, right? We've developed a lot of this brand trust that I think is like almost always underrated in crypto, where people focus overly on the tech and not enough on the kind of human element of it. So for us, the operative question was, hey, we have these users, we have a lot of them. Is there other like ways that we can add value to them? And lending was like a very clear one for us. So building out that business, I think time will tell how successful it is, but we're pretty bullish on the idea of kind of increasing the average value per user and creating more value for each user that comes through. We saw this with perps, right? Like in theory, what business does a DEX aggregator have building like a perps DEX, right? Like we didn't even build an actual DEX, we just built a DEX aggregator to start. And then, fast forward a few months and then it's the number one perps DEX on Solana by a pretty healthy margin. And so we've seen that happen again and again with Portfolio. It was a similar thing. Now the number one portfolio tool on Solana, same is true as a bunch of other things. And so the main goal is like, is this net additive? And does this actually keep people coming back time and time again? To your point, a lot of this borrow lend liquidity is a bit stickier than other types of liquidity. And so we hope it's going to be a real, we hope it's going to be like kind of like a hook into the users that keeps them, loyal to the rest of the Jupiter brand as well.
Are you launching with kind of incentives to draw initial liquidity?
My buddy, I thought you would never ask. Yes, we are. We are launching with heavy incentives. This is a place where we're really excited to show off the power of the tech. And the truth is, especially in borrow lend, there can oftentimes be some reluctance with new protocols to kind of shift major parts of capital over. And you have to compensate that by kind of incentivizing people to take a little bit of a leap of faith. Again, the fact that Fluid has been doing this for 7 or 8 years should give people a lot of faith. It's been double audited with 2 more audits underway. So we feel quite confident in the safety of the protocol, but the incentives will help anyone who's kind of on the margin thinking about it make the jump. So right now we have more than $2 million in incentives lined up, and there's going to be, without at the risk of leaking too much alpha, there's going to be substantially more coming in over time as well. The goal really being like, hey, let's have the best APYs. Let's let people experience that, like how good the borrow and the lending experiences are, and then let them make a call. But first, we gotta open the doors. So the incentives heavy. They're live right now. If people are watching this, they should be either the highest or very close to the highest across basically every asset that you would want to know about. And again, that's like Jupiter and Fluid are both putting up incentives, but so are a whole range of partners. And shout out to everybody that's helping us out there.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I'm also just thinking here, there's kind of a spiritual similarity maybe about in the way that you initially described Jupiter Lend and what Jupiter started out with in the aggregator, where when you swap through Jupiter's aggregator, you don't have to see the way that the algorithm works and routes your trade. You just trade and it gives you a good price. And you're sort of saying the same thing with lending, where you don't have to see where the funds are going, but you're going to get the highest APY on the platform. So it feels like a continuation of sort of Jupiter's MO in that way.
Absolutely. I mean, the key insight is that Solana has a lot of retail users. all love to Ethereum. I started on Ethereum. Samyak is obviously deep Ethereum, so I'm not going to say anything mean about them. But like they oftentimes end up being kind of more whatever academic, or at the very least more sophisticated, right? Like they have larger quantity of money if they're on mainnet paying those kind of gas fees and so on. But Solana is really, the everyman's chain. It's built for anybody anywhere, from like, my like cousin to my nephew to my niece to like be able to use. And so in that perspective, like the UX matters way more on Solana than it does on other networks. It's the reason that Jupyter's been successful, and I would argue that Solana as a whole has been successful. So that kind of like, that focus on how do we make things even easier for users is a big reason why we've had the success we've had, and hopefully it repeats itself over on the Lens side.
Mm-hmm. One piece I want to ask you about, Kash, is like, as far as potential sources of new demand or products that could be popular on Jupiter Lend, I feel like JLP comes to mind. This is one that Daniel Shapiro flags in his report. This liquidity provider token for Jupiter. It's, I think, a very big market on Camino right now. Obviously, I would think Jupiter would like that to happen on Jupiter Land instead. So what are the potential synergies or ways you're thinking about the JLP market and how that relates to Jupiter Land?
Yeah, JLP is the cornerstone of Solana DeFi, like point blank, period. It's like a $1.7 billion asset right now. And, I don't want to dig into anyone else's pockets, but I can promise you this, that the other major DeFi protocols on Solana, like it is one of their primary revenue drivers, if not their primary revenue driver. So it is definitely an incredibly valuable thing. And it's awesome that everyone loves it. I mean, it's like 29% APY right now as a diversified basket of majors. And yeah, we just think that, hey, like if you trust JLP, Jupiter's right there in the name. You probably want to use the same place to do it. As simple as like the mint experience. Like if you're getting JLP from the pool, we can do little UX things like a little pop-up that says like, hey, now you have JLP. Do you want to use it as collateral? Do you want to multiply it and earn more yield? Do you want to do all sorts of different things with it? And so, yeah, I'm hopeful and optimistic that a lot of that liquidity moves back to Jupiter, to its kind of home base. And we think that over time, as we have more kind of sophisticated vaults and strategies, things like hedging JLP, which is again like the number one use case of some other DeFi protocols right now, that we'll be able to retain even more liquidity and have both more kind of like revenues for Jupiter itself, but also more kind of value for users.
And just beyond the fact that it's like, okay, co-branding between JLP and Jupiter Lend, like, are there unique ways that bringing this thing in-house, like there's products around JLP that Jupiter could add that competitors maybe couldn't?
I mean, there are certainly a spectrum of things that we could do. I think a lot of them we don't want to do. Like there are ways in which, you could kind of like limit the usage of JLP and other protocols, or like just add extra friction or something like that. That we're not interested in doing at all. Like I think that Solana DeFi is pretty fucking tiny right now, like in relative to like TradFi or anyone else. And so like the goal is definitely not to like slow down anyone else's growth. So we want to make sure that it's like a free and fair playing field for all people there. So to that degree, there's probably some products that are that we could build that might be similar in other protocols. But since it is like a free floating token, most of the improvements I think will largely be on the UX side, the ease of use side, the brand trust side, those kinds of things.
Okay, interesting.
But I will say, just like as one other point, we recently launched this thing called JLP loans, where you can actually use JLP as collateral within the JLP pool itself. And there we can offer like incredibly great rates because there's whatever $500 million of USDC in the JLP pool or something like that. So it's like an incredibly deep pool, and that is something only we can do because we have access to the underlying liquidity and so on. So there certainly are like some kind of product integrations, but it's not like something that we're trying to corner the market on or anything like that.
And then maybe just say a quick word before we move on from JLP. Just I don't want to like assume that everyone knows like what when you're trading JLP, what does that token actually represent? And when you say it's the cornerstone of Solana DeFi, like what gives it that place other than just the size?
I would say I never give financial advice, just like as a rule. I've been in crypto long enough not to do this, but I will say not financial advice. Personally, JLP is my favorite token in the entire ecosystem because it is just like such a banger idea. So Jupiter Perps is not an order book based Perps platform like you'd see elsewhere. It's an AMM model, right? Which means that every time a trader is trading something, they're trading against a pool of liquidity that other people have deposited. And so within Jupiter Perps, you can trade right now Sol, BTC, and ETH. And so JLP represents an index of those plus a bunch of stable coins. So when you hold JLP, what you actually are holding is almost like an index fund of the crypto majors, except the JLP naturally earns yield because 75% of all the trading fees on Jupiter Perps go back to JLP holders to kind of compensate them for providing the liquidity in the first place. So it's this nice kind of like symbiotic ecosystem between traders on the one hand and liquidity providers on the other. As I said, it has like a 29% APY right now. That'll vary from anywhere between 10 and 50%. The reason that it's become the cornerstone is that one, it's the single deepest pool anywhere on Solana, to my knowledge. I think it's like $1.7, $1.8 billion right now. And two, that real yield is something that's incredibly attractive, particularly to more kind of sophisticated investors or professional investors. So the number one trade for liquid funds this cycle on Solana has not been, go long this or go short that. It's actually been to get JLP, hedge the underlying, which means short Bitcoin, Sol, and Ethereum in the relative proportions, and then just capture that yield because you're fully delta neutral, right? You're not taking any directional risk. You're just getting that 29% APY right now. And so if you look at Drift, for example, and shout out to the Drift folks, they have just a ton of vaults that are just like hedged JLP exposure, right? And because the APY is so big, that's why people want to multiply it and loop it a lot on platforms like Camino and others. And so whether like that yield being kind of true yield, not Ponzi yield, has really kind of cemented its place across the ecosystem. All of that being based on predicated on the fact that Jupiter Perps has lots of trading activity, that people really like to use it, and that we have a lot of brand trust around it.
Yeah, well put. And I guess the other thing I just wanted to ask is like, we've spoken a little bit about this here and there, but just to put it plainly, like what kind of net new activities or products does Jupiter having its own lending protocol enable?
For us, it's right now to start, it's relatively straightforward, right? We want to get the basics right before we start to get a little bit crazy. And let me assure you that Samyak's got some crazy ideas like in store. So right now, it's really just like lend your crypto, earn APYs, as simple as that. Borrow with the best LTVs and all that other good stuff. And then we have multiply vaults on day one as well, which allow you to kind of get leveraged exposure to JLP or Jupe Sol or whatever other asset that you might want. Over time is where things get really interesting. So, as Samyak mentioned, there's smart debt and smart collateral. And basically, if imagine that Jupiter Lend goes up to whatever $2 billion in TVL, right? What kind of products could you build if you had $2 billion of liquidity ready to go for anything that you wanted to do? You didn't have to bootstrap it, right? And that's oftentimes the limiting constraint to new product development is the liquidity behind them. And we don't have that constraint. So to start, we're going to keep it easy. In the future, I think people can expect to see some pretty fun experiments.
So to maybe peel back the curtain on some of those experiments, Samyak, what kinds of things do you want to see in the future? Like, you've been in DeFi and borrow lend for quite some time and built this sort of innovative thing, but what is interesting you further down the line, even further than say Fluid V2 and adding volatile pairs?
Yeah, I mean, Dex V2 is something on the roadmap which we will have in 2-3 months. But there are like I would say like in ideation phase we already have many things. There is the perp protocol which is in ideation phase. There is a fixed rate protocol. There is a credit based protocol, and there are like so any financial instruments that you can think or anything that works in DeFi options or whatever, you will see that on Fluid in next 3 to 5 years or whatever. We're trying. So when you deposit any assets on bank puts it into like hundreds of different strategies or hundreds of different things. What we're trying to do is create the same financial instrument on chain with proper trust and reliancy. And there are many things that don't even exist in DeFi, or even if they exist, they are not so grown, like the insurance, options, credit, and so on. But it will surely come on chain. So those are the things that we will dive deep into. But in the short term, you can expect that we should have a fixed rate protocol. We should have permissionless borrow and lending protocol, so anyone can sort of deploy their own vaults and something like I would say Morpho kind of model. So we'll also have that kind of protocol. fixed rate, and perp is also something in the ideation phase. We have some success on like how can we make it the most innovative perp, but yeah, I mean it's still under discussion. There's still a bit long way to go. These are like some higher level things that will be there like probably in next 6 to 12 months, but in 3 to 5 months, it 3 to 5 years, it will just be a massive protocol. There are also many mini protocols right now on Fluid, which people don't see it on the UI, but it serves its own purpose. But yeah, I mean, basically on a generic level, it just enables a lot of things.
I like how I was trying to be so diplomatic, and then Samyak just just drops all the alpha. There's like a pound and a half of alpha in that last 60 seconds for any of the listeners. So yeah, I mean, anything that because it's the same fundamental architecture and it's the same team behind it, anything that is possible on Fluid is also possible on Jupiter Lend. Is
Yeah.
like the high level way to say that.
Okay, so what would like a morpho model look like if applied to Solana or Jupiter Lend?
I mean, so the main thing, which is like lending and borrowing, will work as usual, but there will be another instance of it where people can also create permissionless markets on it, and they can define their risk exposure. So I mean, ideally, it will be permissionless, but it won't be trustless because the main protocol, the liquidity layer, and everything, the team has the ownership, or the governance has the ownership over it. In case of Morpho, it's like fully permissionless, trustless as well. So the trustless factor won't be there, but the permissionless factor will be there, where we can allow users to do that, but we still have ownership over their assets because we own the liquidity layer. So that will be the bottleneck, but the main feature that Morpho enables is permissionlessness. Trustlessness is also there, but I don't think it matters a lot because people are also willing to trust Aave. That is the protocol with the biggest TVL in DeFi. So I don't think that trustlessness is a big factor if you're trusted enough by the industry. But the permissionlessness just opens for anyone to come and create their market without protocol having to take those risks. So yeah, I mean, basically, as I said, like anything that you can imagine in DeFi can build on top with much more better capital efficiency.
Just like more in general, Semyak, how do you see this space evolving over time? You talked about some of your kind of ideas for things that could come to Jupiter or Solana, but I think relative to maybe other crypto sectors, Barland has been reasonably stable. Like the same sort of big incumbents, assuming they haven't blown up, have continued to be pretty popular. But as you look at things right now, like where do you see things more broadly going on that 5-year time horizon?
Yeah, I mean, so the way I see it, DeFi is still small. Like, I remember like 7 years ago, we were celebrating DeFi reaching 100 million when there was just MakerDAO and Compound as the DeFi protocol. Then, it reached 100 billion. And I think in next few years, or at least next 3 to 5 years, it will probably be a, $1 trillion industry, probably tens of trillions of dollars of industry. A lot of the institutions are going to come on board. There will be a lot of things. The two ways I think it will evolve is a lot of the people will move on chain, and the other ways, if the people don't move on chain, then also they will use DeFi as the backend. For example, you cannot borrow against your stocks right now. Like you own Tesla, let's say in Nasdaq or any stock exchange. You cannot do anything with it. You cannot borrow against your Tesla stock, but Elon Musk can borrow against it. But with the DeFi protocols, Tesla stock supported as collateral, you can borrow against it anytime. And the financial institutions who are already there, hundreds of billions of dollars of financial institutions who already serves these millions or hundreds of millions of users, can just do a simple DeFi integration in the backend and allow their users to borrow against stocks. So, in the backend, they deposit, let's say, X stocks or whatever in Jupiter Land or Fluid. They borrow USDC, but for end users, they are seeing like they deposited Tesla stock as collateral and they borrowed USD from the bank account. So everything can be served with the DeFi market. And this is the thing that TradeFi cannot replicate, because if they want to provide a borrow and lending services on stocks, they need to look after the liquidity management. They need to look after the liquidations. They need to look after how to attract lenders and borrowers. they need to look after these massive things. But in DeFi, all of these responsibilities just divided. Liquidity is managed by AMMs, and there are a lot of the bots and arbitragers like Wintermute and so on who are doing their own work. Then there is this, protocol already has billions of liquidity in stables, and then the liquidation is also automated. Anyone in the industry can do it because they're incentivized to do it. But as an institution, you cannot do your own setup this big. And so the natural evolution will be like they don't provide this service right now at all because it's a very massive thing to build in TradeFi. But plugging it into DeFi, they can provide loans against any kind of assets, which like small people cannot. Like people who hold like tens of thousands worth of stocks or so on cannot borrow against it. But this will enable that, and that's like I think is just $1 trillion market in itself. So it can go in both ways. We are now seeing more and more institutional alignment as well. But yeah, I mean, previously we were just seeing people coming on chain, but now institution have started to accept like Coinbase's borrow thing, where they allow to borrow against BTC is built on top of Morpho. But this is success, and now the next step will be the traditional financial institution. So I think that's where the market will overall evolve. Everything will just exist on DeFi, whether user is using a centralized entity or they are using directly on chain.
Are perps going to continue to be sort of the degen investing mode of choice, do you think? Or like you mentioned borrowing against stocks, and that strikes me as maybe something a retail user might do because they want to, go do some crazy other leverage bets. So like, do you think that perps have kind of topped for the moment, or does that sector like continue to grow at the same time as things like borrowing against stocks comes out?
I have a very strong opinion in this particular thing. Is what I also tell to the team is like perp is like you're creating basically a virtual asset. The asset doesn't have to be there. You're just assuming the asset, but the crypto makes all the assets so liquid. Then the difference between spot and perp will slowly start to converge and sort of merge. Like the movement of capital in crypto is like similar to like you don't have to assume the asset. You can really have the asset as you go on. Like I think on the Jupiter perp, it basically sort of like works in that way where there is massive pool with the real spot assets in there where people are doing average and so on. So in my opinion, like this borrow and lending and perp are sort of the same thing designed into different basket. The reason for that was in TradeFi, everything is so separated out that you cannot, there is no quick movement of capital. But in my opinion, like as you advance from the borrow and lending side and as you advance from the perp side, maybe there is just one final strong product which is just serving all your needs, providing you the best thing. So this is also like what we are also sort of thinking on our perp thing, like how can we bridge this gap? Which is like if I were to give you an like a mini alpha, like the direction that we're taking is how can we merge the AMM spot AMM and the perps order book into the same AMM so that spot traders can also use the same AMM while the perp traders can also do the use the same AMM. So the same AMM can get like the 2x of the fees because it's getting the spot volumes as well and it's also getting the perp volumes. So the LPs on the AMM can have like a massive fee generation. So that this can sort of also help in bridging the gap between perp and borrow and lending market. This is something that is in the ideation phase, but yeah, this is where we are inclining towards. So yeah, those are my thoughts here.
So to make sure I'm understanding this correctly, you're saying that the venues where people trade spot and perps are going to come together in the long run?
Yeah, that's what I think because in crypto the asset is so liquid. Like whether it's on spot, whether it's on perp, like you don't really have to assume. In TradeFi, it used to be like the movement of capital used to be very restricted. So I think it can over time converge into the one thing, a one massive, super sophisticated protocol, which also allows you to do high leverage trading with high borrow rates, while also allows you to do like take a smaller trade with lower borrow rates and so on.
Isn't that like a little bit what Jupiter is now? Like now that you have all these products integrated, Cash, like you can you can kind of trade perps and spot in the same protocol.
Yeah, I think there's certainly what Jupiter offers right now is the same kind of like UX and destination website for it. I think if I'm understanding Samia correctly, like where it looks like is maybe less like perps, more like spot margin, for example, where like the underlying asset is there. Those spot assets can also earn yield at the same time and do like a bunch of other cool things. There's definitely like a version of that that's kind of happening with the way that Jupiter Perps is set up right now because there is spot under, but it's only three assets, right? And those three assets, you get JLP backs, you're getting this kind of like yield generation, but it's not fundamentally like borrow driven yield generation, right? It's trading fees generation. So if you're able to create an architecture where, if you think Fluid on the Ethereum side, right, it starts as borrow lend. So you get deep liquidity because you have a lot of people lending in order to get APYs, a lot of people borrowing for whatever reason. Then you're able to turn that into a DEX because you have this resting liquidity. I think the next evolution could be that like, okay, well, now if you have all this liquidity, then you can actually offer spot perps or spot margin, I guess would probably be a more technical term for it, on that existing liquidity that's there. And then you can use that same existing liquidity for reinsurance protocols or, fixed income products as well, or whatever else that might come in, all based on the same set of liquidity and also based on the same like protocol architecture. Is that right, Samyak? I mean, you can correct me if I just fucked all that up.
Yeah. I mean, it's like more, along the same lines. That's more or less true. Like, I just think like everything will converge into the same place. Yeah.
That's fascinating. I think the last thing I was curious to ask you about Cash is just big picture for Jupiter here.
Mhm.
Jupiter now has Swap. It has a launch pad that you recently launched. There's perps and there's lending. So in my view, that's like a lot of what like borrow lend. That's like what DeFi is right now. I can't think of anything you're missing. So is this sort of like is Jupiter kind of set for the time being? Like, should we expect fewer big moves like this in the future, or I'm just curious what the road looks like from here now that you've kind of hit like the four big pieces of DeFi.
Uh, Absolutely not set. Definitely like a ton of work to do. So obviously, there's a bunch of work to be done on those four pillars that you already mentioned, right? In particular, Jupyter Studio, which is kind of the token creation platform that you referred to, that's in still like very early stages. We're trying to set kind of new metas and how tokens are generated, and that's going to take some time to develop. But even outside of those, even if you assume that all those are great, there's I think a lot of value that the financial system provides to people that Jupyter's not providing right now, right? So payments is an obvious use case where this is like a multi-trillion-dollar TAM of money moving around, and Jupiter not really in that game too strongly yet. Yeah, we have Jupiter Send, we have we have Jupiter Mobile with Jupiter Send, so you can send money around as a link, which is pretty cool. But there's a lot more that we need to do there in terms of like onboarding folks. Uh, you know, Basically, if you look at like go to JP Morgan's website and look at every one of their kind of like divisional leads and be like, okay, this is probably something that's going to be coming into DeFi at some point. Well, I'll use insurance just because we've been talking about insurance and reinsurance protocols, right? That seems like an obvious thing. Now, we have no short-term plans to launch this. So like, please do not go tweet after this, like Jupiter's launching a reinsurance thing. But insurance is again like a multi-trillion-dollar TAM globally. It is something that we believe is fundamentally going to move on chain, and we want to be there. So right now, I think Jupiter is pretty well set on what DeFi offers today. But the real question is like, what does finance offer globally? I think too often teams in DeFi think about themselves as like a part of this very small sect called DeFi. And Jupiter has always been like, hey, no, what we're competing against is not Hyperliquid and Camino and all these guys. God bless them all. We hope everybody wins, whatever. But like, what we're really competing against is like Goldman Sachs and JP Morgan and Coinbase and Robinhood and everyone else that's out there. So I think that there's a ton of growth potential still for us on the new product development front. And what we have now is a strong base to build the rest of that off of.
Mm-hmm. Yeah, well put. And then Semyak, I'm going to kind of pose you the same question. Fluid is adding V2 is coming soon. You're adding volatile pairs as we've spoken about. You also now have a presence on Solana, which is a very vibrant trading DeFi ecosystem right now. So how do you look at the future of Fluid? Like, what's top of mind for you as you think about building on the success that you have seen so far?
I mean, the day one that we launched Fluid, as I said, like we named the protocol as the ever evolving DeFi protocol because what we thought is like before that the capital was very fragmented and so on, and we thought like that there can be hundreds of different protocols that might be needed serving different kinds of purposes. So how can we build that? And that's why the fluid architecture is how it is right now. And if you see like the other protocols, like Aave V4 is also having somewhat similar architecture to what Fluid has, I think. But yeah, I mean, it's like the overall architecture to build any kind of protocol and provide any kinds of need, because surely the DeFi is, as I said, like is going to be trillions of dollars of industry. It will serve all kinds of purposes. And like there are two ways, and on both the things we are focusing is like how can we get it integrated with more institutions who already have millions of users, who probably are not going away anywhere soon, but maybe they can transform into DeFi. Or like the second thing is how can users directly also use come and use from our own app and UI. So yeah, I mean, this is also like if I were to say like Jupiter is also sort of like that backend integration where we did the development and it's the whole backend thing, but Jupiter has this massive community and massive distribution, which will allow it to be success on day one. So yeah, I mean the thing that I'm confident at on the Fluid side is like we probably have the best developers and most technical team to build any kinds of complex applications, or innovate or bring into the industry something new that didn't existed, algorithmically, mathematically, and so on. And yeah, I mean, but on the distribution side, like I think there are players who are much better than us than at doing that. So probably aligning ourselves more with them makes more sense to reach to a broader audience. So yeah.
Nice. Well, that's all the time we have, but and I guess you both have to either sleep or go about launching Jupiterland. I'm not sure what today holds for you based on time zones and everything, but either way, it's been a fun conversation, and I really appreciate you both taking the time.
Always a pleasure, Jack. Thanks for having us on.
Thanks, guys, and thank you, listeners, if you've made it thus far. If you enjoyed this episode, we'd love if you gave it a thumbs up or a 5-star review wherever you get your podcasts. Please follow us on X, subscribe on YouTube, all that good stuff. If you enjoyed this episode, please share it with a friend, and we will see you all again very soon.